JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 1st of December 2021, guys. So welcome to the first trading day of winter. So yep, wherever you are, guys, welcome, and yep, I hope you're having a good start of Wednesday. So yeah, before we jump into the charts as usual, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, well, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page. So if you click here on the top, it'll take you to our page, which we update on a daily basis. So yep, check it out, and I believe you can find some useful information in there. So, okay, so once it's loading up here, so yeah, I do apologize for the kind of slight lag if there is any, or any quality issues. So hopefully that can continue going and running smoothly. So so yeah, guys, jumping into the charts, the first instrument I want to touch on here is of course Nikkei 225. As always, I mean, I'm picking up on this one first, and just to see what was happening during the nighttime and during this early hours of the morning session, the Asian session. And yeah, so this upside support line did provide a hold up. So what I talked about previously was that, in a way, if we drop a little bit lower, but we find support somewhere near this upside line, it could continue providing a hold up, and we could see a nice little rebound. So so we got that. The index did close in positive territory slightly. However, of course, we'll remain very careful and cautious, just because if this upside line gets broken again and we see that the index closing below this upside line, well, I mean, further declines could be possible. However, if we rebound from it, yes, we'll aim for some higher levels, but I would prefer actually to maybe wait for a push at least somewhere above this 28,581 zone, just to be a little bit more on the safe side. I mean, or even at least a push back above the 200-day EMA, so that in order to maybe prove that these two scenarios could be valid, basically, or should I say, the scenario this time could be the same as these two previous ones. So if you can see here, when we a few times in the end of August and in the beginning of October, we dropped below that 200-day EMA. We traded a little bit below it, and then after a couple of days, we kind of climbed back above it and moved higher again. So that's what I'm gonna keep an eye on. I want to see if this is going to work out like this or not, but again, don't get me wrong, I mean, maybe the third time is going to be the lucky one here for Nikkei bears, and yep, we could see a further decline. We might not even see a climb higher. So also what you can consider here is that if we do retrace a little bit to the upside here, but the index struggles to remain above that 200-day EMA, or should I say climb and remain above that 200-day EMA, then, well, another slide could be possible. Hong Kong's Hang Seng Index closed nicely in positive territory, but it kind of stayed I would say in between these two levels, the ones that I mentioned previously, the lowest point of October and the lowest point of September, it stayed in between those two levels. And well, I mean, I would say that this overall, this whole support zone, which I previously looked at as support zone, now I'm looking at it as a resistance zone. So this resistance zone is providing a strong hold up. So if we climb somehow back above it, yes, and we stay above it, then maybe we could consider maybe a bit of a larger correction here to the upside towards that 21-day EMA, and then we would take it from there. Maybe we would go for a bit of a larger correction, but for now, let's go slowly on this one. And for now, I would say, yeah, keep your eyes on this key support zone. Let me just actually highlight this one right here, because probably that's going to be the more important one right now to monitor. So yeah, that's what I'm going to be looking at. So if we continue to trade below this, another slide could be possible. Now jumping into DAX here, German DAX, and here we can see that we traded and stayed below this upside line, below the 200-day EMA. There was an attempt to climb higher, but as you can see, it failed, and yep, the market continued selling off. If we take a look at the cash index right now, where we are at the moment, we'll see that the price is sitting at around 15,273. So basically, kind of above this upside line right now, I think. Yep, that's true. So we're near that 200-day EMA again. Let's see if it holds. I mean, for now, you can see that one of these stronger points here that I talked about, this 15,019 level, kind of held nicely. So I talked about this level yesterday. That was one of my targets. We've reached that, and yep, from here you can see that the index rebounded. Now, in terms of these upside lines, getting rid of those because those get violated. I'll keep this one for now. This one's drawn from the low of the 11th of December of 2020. So yeah, if we do climb somehow back above this 200-day EMA, then we might see, and stay above it, then we might see a bit of a retracement here to the upside. However, of course, if you're kind of looking for some maybe higher levels, or maybe going for that all-time high again, well, basically at least a break of this downside line is needed. So this downside line is taken from the high of the 19th of November, so we need to see a nice good pop above it in order to go for some higher levels. So keep that in mind. For now, like I said, I'm going to be very careful here. Yes, we're trading back above this upside line. We are near this 200-day EMA. Or actually, we are now even above that a little bit. So yeah, we are slightly above that, but I'm going to keep an eye on this 200-day EMA. If we do continue to trade somehow above it, then yes, like I said, I'll consider maybe a bit of a retracement here to the upside. S&P 500. So this one is not really feeling well. Yesterday, the indices, the U.S. indices, did sell off, and yeah, so we saw this decline. We remained below that 4,630 territory right here. Looking at the cash index, where you can see that it's trying to recover. We're back above. Well, we're above yesterday's close, of course. We're kind of near that 4,610 zone right now. So basically, it seems that it's trying to recover. However, there's a lot of buts here, and well, I mean, we need to kind of keep an eye on those, because basically we do have this downside line taken from the high of the 22nd of November, and in a way, if you're looking for the upside, well, inevitably a break of this downside line is needed. So that's why, yeah, be very careful for now. Be very cautious, and yes, even though we're seeing a bit of a retracement, I mean, if this downside downside line somehow continues to provide resistance, then yep, a continuation move lower could be possible. Another thing for you to consider is the fact that we could see a nice breakout here initially, but if by the end of the trading session still drops below that downside line, well, we'll just get ourselves a nice little false breakout, guys. Now in terms of the upside, actually, like I said, again, the breakout of this downside line is needed from the technical side. But let's not forget. Let's see how we're going to trade going into the whole holiday season. I mean, we are right now in the holiday season, so let's see how that's going to play out. I mean, or did we already have that kind of, let's say, holiday rally? However, again, looking at this one right now, I mean, it seems that for now it's not really declining much, so maybe, just maybe, we could not be done with the upside yet. So, well, let's keep an eye on that one, and of course we'll continue monitoring the whole situation with the with the whole coronavirus thing. So yeah, let's see how all that's going to progress. But anyway, DXY, the dollar index. So looking at this picture here, we can see that the upside line here, this long-term, or should I say medium-term upside line, is still kind of valid. We're still trading well above it. However, given the fact that we are well above it, maybe we could fill up this little gap here. But of course, let's not rush into anything. For now, I'm keeping an eye on the 21-day EMA. Yep, I'll need to see a nice good drop below it in order to aim for lower levels. Now I've drawn this steeper upside line, short-term tentative steeper upside line. However, I don't know if this is going to play out much or not, but just for the sake of it, I'm going to keep an eye on it right now. Now in terms of some of the other levels here, now this is where I need to probably, it's time to adjust these, because well, these got violated, and so need to relook at the whole thing here. Now, first of all, of course, marking the highest point of November. Now that's the important thing here. Then probably we'll remove that level, and I'll just put it somewhere here, just for me to kind of reuse it later. Now these two levels I'm going to stick to for now. Actually, this got violated, no longer is needed. So the only thing is what probably to keep in mind could be some of these levels right here. So, okay, but that's for later. For now, looking at this picture, this is becoming a little bit more clear. Now, also something, and it seems that I'm becoming a huge fan of these head and shoulder patterns. So yeah, let's see if that's going to play out or not. But basically, what I'm seeing here is maybe a left shoulder forming here and a head forming here. We're having this decline, and if let's say finds support somewhere near this 95.52 zone and then rebounds, we could see a formation of the right shoulder, and then maybe, yeah, maybe this upside line could come in nicely later on. But for now, let's put it this way: I'm leaning a little bit more towards the downside, but only if it continues. Let's say for now, if it continues to trade below this 96.24 territory. If it does, then yes, I may consider a bit of a decline here towards this 21-day EMA, and then I'll take it from there. Gold, very quickly on this one. So, talk about annoying trading. Basically, here I would say it's kind of working out, kind of not. So it did drift lower. It did kind of break that so-called neckline, but as you can see today, we're seeing a nice little rebound here. However, this is one of those situations probably where the market teases everybody, all the bulls and the sellers, and basically, let's say if by the end of the day still this candle drifts back below this 1782 territory and stays below it, now this is where it could still become, it will still be quite interesting for the sellers, because at the moment, yes, we are seeing a nice little recovery, but it's if like I said, if this somehow ends up being still below that 1782 territory today, I will see this as a very nice clearing of a lot of traders, and basically this is where a lot of traders could get wiped out. It would mean that a lot of sellers were jumping in here, selling this one, but now it's kind of and having their stop loss somewhere around here. And this is this reversal here wiped out all those stop losses. A lot of bulls jumped in here, maybe considering that this one maybe will not give up. But by the end of the day, if it still drifts back lower, and this is where a lot of bulls could get wiped out. So leave it a little bit here. I would say keep an eye on it. It could be quite interesting for me for the upside. I mean, I would like to see at least a push back above the 1800 level, or even better above this 1814 zone. For the downside, as I said, if it drops back and stays below the 1782 territory, yep, this could be quite interesting still for the sellers. WTI oil, so very quickly on this one, drifted nicely to the downside yesterday. Yep, fell below that 67.43 zone, and yep, now we're seeing a bit of a recovery. So everything seems to be quite normal, I would say. Normal trading, but I would say this way, as long as it stays, from the short-term perspective, as long as it stays below that downside, this 200-day EMA, then yes, we'll continue aiming lower. For the upside, I would like to see a move above, at least back above this 200-day EMA, and then yes, we could consider maybe a bit of a larger correction here to the upside. A quick update on Bitcoin. So Bitcoin is at a very interesting spot here. We're near this downside line taken from the high of the 10th of November. So if you're looking for some upside, well, basically a clear break of this downside line is needed. And a push above this 21-day EMA could do the trick for a few more buyers. So keep that in mind for the downside. And this is where it's kind of a little bit interesting, I would say, because I would, of course, personally, I would like to see a drop below this 55,653 territory, somewhere around here, and then yes, I could consider some lower levels, but it could drift to the downside, could find support near this 53,458 zone, and then maybe find support here and then rebound and push back towards this downside line. Now, if of course it continues to slide and falls below this lowest point of November, then yep, that's where it could become again very interesting for the sellers. Up until this upside support line taken from the low of the 20th of July. So yep, that's unfortunately the game plan. Now jumping into a few pairs before I actually run out of time, so I still have a few to go through. So Aud USD, I talked about this one yesterday. This 0.7106 territory held nicely. Yes, we had that false little breakout here, you can see here, and now we're seeing a nice little recovery. Now keep your eyes on DXY. If that, let's say, continues to slide here, this could benefit Aud USD. We could see a further push north, but of course all eyes are right now on this little short-term tentative downside resistance line taken from the high of the 2nd of November. If that gets cleared, yes, we could go for a bit of a larger correction here towards that 21-day EMA or this upside support line. USD CHF, so just bear with me one moment, guys. Yep, just a second. Apologies for that. Apologies for going silent a little bit. Now, USD CHF. So, after we found good support, the resistance near this 0.9368 zone, we're seeing a nice little drift lower. I mean, I talked about this one previously. I said that if it drops below this 0.9251 territory, then yes, I mean, we could see a further decline. And to be honest, so far, so good. This is playing out nicely. It reached my target, this 0.9176 territory near this 200-day EMA, and it's currently trading near it. So if we drop again below this territory, then yes, I will consider a further move south here towards the 0.91 territory, and then we'll take it from there. Now, in general, if you probably already can see it, it seems that we could be having here a nice little range. So, yep, let me just mark this on the chart. So something like this could be possible. I'm not saying that this is going to be for sure, but again, we need to consider all the options. And yeah, if we drop below this hurdle, then yes, I'll aim for further declines here towards this 0.91 territory. US dollar against the Turkish lira. Now I'll quickly mention it because that's madness, and well, I mean, it continues to rally, and yesterday we hit a new all-time high on this pair, not to mention the euro Turkish lira as well. I mean, that's just flying sky high. However, again, of course, a lot of people, a lot of traders are already looking for that, maybe a larger correction to the downside, but to be honest, I mean, until the situation in Turkey sorts out itself a little bit better, then I mean, this could remain, the Turkish lira could remain under pressure, and well, I mean, it could continue devaluating against its major counterparts. GBP Aussie, quick update on this one. So yesterday I talked about this one as well, and said that in a way, in order to go for some higher levels, we need to see a nice good push above this 1.8762 territory. We did get that initially, but as you can see, it quickly reversed to the downside. That's why I always say I would like to see the body of the daily candle staying above a certain or below a certain level. Yep, this exactly is why. We're still on the positive note, we're still trading above this upside line taken from the low of the 15th of November. So in a way, kind of it is kind of helping out here. But given that we have violated this upside line today, I'll take a bit of a careful approach. I mean, I'll see what it wants to do further, because at the moment it's just kind of, it's just playing a bit of a tease game here. So in order to go for some higher levels still, I need to see that pop above the 1.8762 territory, and then also I'd like to see the body of the daily candle remaining above it. And yeah, for the downside, at least a drop in this, below this 1.8606 level could be needed. GBP CHF, so very quickly on that one. This one is interesting because, as you remember previously, I talked about this this falling channel pattern, which so far is kind of playing out nicely. Now, we did get that violation yesterday, but as you can see, the bulls are trying to push this one back inside this pattern. Now, this is where my concern is going to come in, and again, like with gold, I want to see where this candle is going to end up, where the body of this candle is going to end up being today. If it stays somehow below this a lower side of the falling channel, then well, I mean, we could see further declines, and well, this is where we will have to start aiming maybe somewhere for this hurdle right here. Actually, this is kind of coming out perfectly with the, there we go. So it marks the inside swing high of the 8th of January of this year, and the low of the 18th of January. So good potential target, 1.2058 zone. That's what I'm going to be aiming for if we do see the body of this daily candle staying below this lower side of the falling channel. On the weekly chart, I think it looks even better. It just looks a little bit more clear. However, you can see that yes, if this weekly candle stays above this upper side of the lower side of the falling channel, then maybe we could see a nice little reversal going into next week. So this is the game plan. Unfortunately, we have to play sometimes. I know it's sometimes annoying, but again, it's a bit of a waiting game here as well. EURUCAD. Now, EURUCAD. I don't know if Evo is here in the watching. Yesterday, Evo, one of our viewers, Evo, mentioned this pattern, and I think there was confusion. I thought he was referring to USD CAD, but so there we go. It was EURUCAD. Anyway, so yeah, the broadening triangle, that's what I think he was referring to. Okay, it could be the case, yes. I mean, I've drawn this one just to kind of analyze. In a way, this could be the case. However, I mean, it's also the bullish flag that we're looking at here, and in a way, both of these kind of could play out nicely. So, of course, as you know, the broadening triangle here, I mean, it could be seen as a nice little reversal signal. Could be the case, and to be honest, another confirmation that we're getting is the fact that we are still trading above the 21-day EMA. We're forming a nice little bullish flag here. So in a way, yes, a lot of things are kind of leaning towards that upside. However, I still would like to see a nice good pop above the 1.4494 level here, just to be a little bit more on the safe side. Yesterday we did get that, but as you can see, the body of the daily candle still remained below it. But if we do pop higher here, then yes, we will aim for the upside on this one. Euro JPY. So this one's quite interesting as well, because this hurdle continues to hold. This 127.93. Yesterday I talked about this idea. If we climb back and stay above this 128.33 zone, then maybe a bit of a larger correction here could be possible. And by the way, also this means that if Euro JPY is going to push a little bit higher, maybe the equities could retrace a little bit as well, because basically the yen the yen buying would not be that strong, and yep, the equities could mean that maybe we could get today to risk on environment again. So keep that in mind again, like I said, but of course it's not guaranteed. For now, I'm just keeping an eye on it, and I would say as long as we stay above this 128.33 zone right here, then yes, we will continue aiming higher. For the downside, I would like to see a drop below this 127.93 territory right here, and then go for some lower levels. And finally, EURUSD. So here we have a pair which did reach my target, this 1.1331 zone. I talked about this, and yep, basically we're now kind of resting slightly below it. Now we're seeing a slight little correction lower, but I'm not saying that this is something drastic. We did break this downside line, so no longer needed. We can probably recycle it, actually. Let me just it's not, again, something to kind of really stick to be honest, because it's all tentative. But just for the sake of it, we can keep an eye on it for now. But for me, mainly, I would like to see, in order to go for maybe a larger correction to the upside, I would like to see a nice good push above this 1.1331 zone, push above this 21-day EMA, and then yes, we could go for some slightly higher levels. For the downside, I would like to see a drop below this yesterday's low near the 1.1235 territory, and then we could go for a, like I said, could go for maybe a bit of a decline again. So that's it for this session, guys. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, guys. So thank you for all that. And yeah, if you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. So yep, for now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.